I'm going to, I think to just make this easier, I'm going to work through the presentation. That'll probably take me about 30 minutes, and then we'll have plenty of time for questions and answers. So as I go through the presentation, I'll just let you know what page I'm on. Just starting on the first page, the first couple of pages, just to give a little bit of context to our Africa Attractiveness Survey. This is now our third annual survey. We kicked this off in 2011. I guess in the wake of the Soccer World Cup in South Africa, with the advantage of having a good decade of strong economic data on Africa showing the robust growth story over that period of time. And it coincided as well with Ernst & Young's own ramping up of investment into the continent, of our own process of integrating our firm across the continent. And it seemed like a good time for us in a context in which an increasing number of our clients were looking for data on Africa, were interested in investing in Africa, that we started to pull together some facts about the investment climate, as well as starting to poll some perceptions around investors out there. So we kicked off our first Africa Attractiveness Survey in 2011. We called it It's Time for Africa, because there was clearly a growth story emerging. Last year in 2012 we launched our second one, and there we had quite a strong focus on infrastructure. We called it Building Bridges, and on the back of the economic growth story, we said that there is clearly a great story to be told, but there's still a lot that needs to be done, and probably at the top of the list was investment in physical and soft infrastructure to connect the markets up across the continent, while at the same time addressing the very clear perception gap in terms of investor perceptions that was out there. This year, the narrative has continued, and I'm going to delve into some of the detail a little bit later. But this year we've shifted gear again, and we've called our theme this year "Getting Down to Business," because we feel we're at a point now where we have celebrated the growth story. We've identified certain key issues that need to be addressed, and it's really now time for a bias to action and to really focus on getting certain key things done. But I'll come back to the overarching theme. Just a little bit more background to the report. We've got a consistent methodology that we've followed over the past 3 years, and it's a methodology that we as Ernst & Young, that we follow in other markets as well. So besides Africa, this kind of study is done across a number of other markets, which from our perspective, we feel it also makes it useful to be able to benchmark Africa and individual African countries to other economies and regions around the world. But essentially 2 parts to the study. Firstly, we conduct a survey of 500 business leaders around the world, so that covers 38 countries across the world. So we feel we get a good cross-section of business leaders, generally from what we call the C-suite, so CEOs, CFOs, chairpeople, decision makers, from a broad range of countries across the world and a broad range of industries and sectors across the world. About 2/3 of those people or those companies are already doing business on the continent. About 1/3 are not yet doing business on the continent. So again, it enables us to get a good feel across those different categories of people. We then also look at the reality of investment on the continent. We look at FDI numbers, and we analyze those from different perspectives as well. Just to clarify, because there are different definitions of FDI, we look specifically at greenfield foreign direct investment projects in Africa. So we use a service from the Financial Times, the UK-based Financial Times. It's a database called FDI Markets, and we draw all of our data from that database. It gives us data looking at FDI right back to 2003, so it also enables us to do some really interesting trend analysis, and it covers every region in the world. So again, it also allows us to benchmark across various regions. So it is important as we go along that I might just come back to kind of qualify the exact type of FDI that we're looking at. Then using both those qualitative, in other words the survey inputs, as well as the quantitative, the hard FDI numbers, we then develop a storyline or a point of view, and it's one that we continue to develop. We develop insights, we shape the viewpoints, and really our starting point, and we are upfront about this, is that we shape viewpoints to support increasing levels of investment into Africa. So that's the background to the report. just moving over to the next page, and I'm now on page 4. If you look at the bottom of the page, in the middle there, just to highlight some of the key themes. Firstly, just to provide a little bit of context. So, key themes this year. Firstly, just re-emphasizing the point that Africa's rise is real. Certainly in 2011, when we kicked this off and we celebrated the African growth story, the facts really supported what we felt was a sustained decade of economic growth and progress. We have noted over the last couple of months, a few articles coming out, some commentary across various parts of the media, questioning the sustainability of that growth, questioning the quality of that growth, and so on. So, what we have tried to do again this year is just reinforce and re-emphasize the facts and the factors that support what we believe is a sustained and sustainable growth story. We do, however, make the point and observe that for us, the FDI numbers don't fully reflect the positive nature of that economic growth story. And to some extent, that is part of that perception gap that continues. There are a number of skeptics out there, and once one scratches beneath the surface, the skepticism it runs quite deep. But having said that, so FDI projects were down this year. The picture was a mixed one, because projects were down quite substantially globally, and in relative terms, FDI numbers remained relatively robust in Africa, and I'll get into some of that detail just now. The perception gap, so looking now at our perception survey, the most obvious issue or factor in this year's survey was, again, the perception gap that exists between people who are already doing business on the continent, who are overwhelmingly positive about where the continent has come from and where it's going to, versus those who have not yet made that investment. Just really reinforcing for us the levels of skepticism which remain, and really reference an Africa that for us is 20 to 30 years old. So certainly investor perceptions among people who are doing business on the continent already, both African and from outside of Africa, are very positive. Finally, we propose this year, as part of our kind of moving on, a shift in emphasis. And it's just a shift away from trying to sell the African story too hard, to really focusing on enabling those already doing business on the continent, and encouraging both government and business to work together to make it easier for those companies that are already established in Africa to invest, to grow, to do the business that they're looking to do. So those are the overarching themes, and let me go into a little bit more detail on each of those. But starting with the numbers, and I'm moving over now to past the next cover page, which is FDI in 2012, a mixed story of growth and decline, to the first graph, which shows new projects FDI inflow trends into Africa on page 6. So at face value, I mean, the headline here will be that year on year from 2011 to 2012, FDI projects in Africa declined by 12%. So new projects flowing into Africa and across Africa declined by 12%. So at face value, you can imagine when we saw that number, once we did our initial analysis, it was quite disappointing. And it is disappointing, given the growth that we had seen the year before. But I think once we dig down a little bit into this, we can put that into a little bit of context. So firstly, when we look at this as a trend, and we think it is important not to just look at year on year, but to look at sort of medium-term trends. And the point in time that we tend to pick out here is 2007, because that then shows us the trend through the global economic crisis, in the wake of the initial financial crisis, and now in the context of a global economy that remains very soft. You can see that the trend has been a generally positive one. 2008 was the peak in terms of FDI projects into Africa. It was a significant peak. There was a sort of decline in 2009, 2010, a strong rebound last year in 2011, almost to the peak of 2008, and then a 12% decline this year. The point here, I guess, is firstly that the decline this year is still the third highest number over the past decade. And when we look at the trend over the period from 2007 to 2012, there's still a strong growth trend over that period for Africa as a whole, the compound growth over that period is 12.8%. And when we look at sub-Saharan Africa specifically, which is the real success story over this period, that growth rate goes up to 22.3%. So while investment into North Africa has stagnated, in fact into sub-Saharan Africa it has remained very robust. Moving over to the next page, and really just to put some of this in context, it's important that we look at the flow of projects into Africa in the context of global flows and projects. So in global terms, the flow of FDR projects has declined by over 15%. So whereas in Africa it's been a decline of 12%, in global terms it's actually been 15%. And as a result, Africa's proportional share of FDR projects has actually increased. And again, when one looks at that as a trend over time, you can see from 2007, on page 7 here, Africa's proportional share of FDR projects was only 3.2%. Steadily over the next few years it's grown year on year. So in 2011 it had gone up to 5.4%. By 2012, despite the decline, because of the global decline, it had actually gone up to 5.6%. So while the headline of 12% reduction in FDR projects is disappointing, certainly disappointing to us, and we expected, given the strong interest that certainly we've found from our clients over the last couple of years, we certainly expected the numbers to continue to grow. The decline is only a relative decline, and relative to global flows, it's actually remained quite robust, and the proportion of projects has actually grown. This year, we've also looked at the United Nations FDR numbers. So I said earlier that our core source of data is the FDR markets database. That's a service of the Financial Times, and that looks at greenfield, primarily at greenfield investments, so new investment coming into the continent, creating new jobs, and also a significant brownfield or expansion investment. The United Nations FDR data looks at something quite different. It also looks at mergers and acquisitions, so it looks at equity investments, it looks at profits that are reinvested into local operations, it looks at intercompany loans and other things like that, which our data set doesn't look at. But we thought to give it a little bit more richness this year, let's also look at the United Nations data. And moving over the page to page 8, you'll see the United Nations data which looks at the capital, or the net capital flows into Africa. Actually again reinforces the relatively positive story in Africa, whereas for that category of FDI there was an 18.3% decline across the world, and almost across the board in both emerging and certainly in developed and the significant emerging markets, there was actually an increase or growth in Africa's in Africa of 5.5%. So although it wasn't a strong growth, it was certainly in positive territory, unlike almost the entire rest of the world. So again, it just shows us a slightly more positive face to some of the more negative, or how we might interpret some of the other data more negatively. So let's just look at some of the key trends. What are some of the key trends for us in terms of the FDR numbers? And these are trends that have been evolving over the last 3 years, and really this year we're just re-emphasizing those trends, and the numbers are just re-emphasizing them for us. And focusing on 3 key trends in terms of the numbers. The first one, and I alluded to it earlier, sorry, apologies. Let me just take a glass of water here. And I'm now on page 10, is that certainly in the period since 2007 in particular, there's been an increasingly strong focus on FDR projects in sub-Saharan Africa. So whereas, as I said earlier, at best, FDR projects in North Africa have stagnated, we've actually seen robust growth in FDR projects into sub-Saharan Africa. And if one looked at this a decade ago, even 5 years ago, these projects would have been dominated by primarily by North African countries, so Egypt, Morocco, Tunisia, Algeria, Libya would have all been in the top 10 in terms of attracting FDR projects. And then, out of the sub-Saharan countries, South Africa remains number 1 and has been for the entire decade. Nigeria would be there and thereabouts, and Angola would be there and thereabouts. But over the last 5 years in particular, we've seen very strong growth, and this graph shows you where the growth has been over that 5 years. Ghana really standing out very strongly there. Congo-Brazzaville, that's not the DRC, that's Congo-Brazzaville in number 2. Kenya, Cote d'Ivoire coming out of relative instability, and FDR picking up again. Some rising stars which wouldn't have even have featured 5 years ago, like Tanzania, Mozambique, Zambia, coming off over a decade of strong economic growth. Zimbabwe as well, coming out of years of instability where investment is starting to pick up, and so on. Nigeria and South Africa still performing pretty strongly over the last 5 years in terms of growth in FDI. So that for us has been a key trend. Key sub-Saharan African economies, particularly ones that have been experiencing sustained economic growth rates, are attracting increasing levels of FDI. The second one, again, this is one we've highlighted before, but continues to come through very strongly, is the growth in intra-African investment. Intra-African countries, or African countries like Kenya, like Nigeria, like South Africa, substantially growing their investment into other African countries over the last 5 years in particular. You can see on that graph on page 11 the relative growth rates in intra-African investment from those countries into other countries, which for us, it's not just the numbers there, it's the confidence that African companies themselves are showing in other African economies. And that for us just underpins some of the almost a sea change over the last decade in how Africans themselves are viewing Africa as a place to invest, are viewing Africa through, very optimistically and very positively. Perhaps the standout here for us this year is South Africa, and the degree to which South African investment into the rest of the continent has picked up over the last few years. In fact, once we strip out investment into South Africa itself from abroad, and we only look at foreign direct investment projects into the rest of Africa, South African companies, South Africa was number 1. So South Africa was the single biggest investor in FDI projects in the rest of Africa, bar none, last year in 2012. So, that for us, again, just re-emphasizes the growing confidence that Africans themselves have in the rest of the continent, and it's a very positive trend for us. The next slide is one we've just included to highlight some of the South African firms that are leading the way in terms of emerging market investors into and across Africa. So we just really wanted to put a few names to faces, so to speak, scratching beneath the surface of the numbers and looking at some of the companies that are investing. The point I would make here is that for those of you with an interest in South African investment across the continent, these numbers wouldn't include the likes of SAB Miller, Old Mutual, Anglo American, all of whom are fairly substantial investors into and across the continent, because technically those companies are headquartered in the UK, and they'd be counted as UK investment into Africa. So if one had to count some of those investments as well, it would make the South African number even higher. So that for us, certainly as we look at the continent from down south, is a very positive trend for us. The third key trend, again, a very important trend for us as a lead indicator of economic growth trends, and that's the diversification of investment into the continent. We've got data going back to 2003, and when we look at the trend in the changing trend in investment from 2003 through 2012, it's very clear that there's been a big shift away from, particularly away from resource sectors towards services, manufacturing type activities, infrastructure related projects. Whereas in 2003, a big chunk of projects, and particularly capital, would have been dominated by resources. Certainly by 2012, we found that 70% of the projects, the FDI projects in Africa, are actually in the services sector. 73% of the capital being invested into Africa are not into extractive activities, actually kind of just pulling stuff out of the ground, but into value-added activities like manufacturing and infrastructure. So again, a very important trend for us. Just looking at the right-hand column on page 13, looking at the compound growth in different sectors, you can see that the real growth there has come in things like financial services, business services, communications, food and tobacco, which is a category, and transportation. And you can see that in relative terms, there's been a decline in coal, oil and natural gas as well as metals. That's not to say that the levels of investment in the resource sector has declined. It's just to say that in relative terms, the investment into the other sectors, particularly in service sectors, has grown exponentially. So those are the three key trends, and for us, trends that make us and underpin some of why we are positive about the future of Africa as lead indicators. It's not just that projects over time are increasing. It's also the diversification, both from a market perspective, also from a sector perspective, as well as the investment that is coming into and across the continent from Africans themselves. We feel those are all critical trends in terms of the sustainability of the growth trends that we're seeing from an FDI perspective. I'm on to page 14 now, which really, again, just tries to put a few names to faces, just tries to scratch beneath the surface of some of the overall, kind of the high-level numbers here, and just highlights for you, what for us we're seeing as being the sectors that are emerging as hot sectors for investment, as well as some of the key just examples of multinationals that are operating across the continent, have been operating across the continent, are growing their investments across the continent, and are among those that are very positive about the continent and its future. Four of those that we highlight here, Tullow Oil, Diageo, Standard Chartered, and General Electric, in fact, are profiled in our report. So as you go through the more detailed report, you'll see viewpoints from some key executives from those companies. But all we've tried to do here is just highlight 6 sectors, broad sectors that we feel are key sectors looking forward from an investment perspective. We have, of course, included here the resource sectors because we do believe that those remain, oil and gas and mining and metals remain key sectors that are going to continue to attract investment, are going to continue to drive growth. But the real story on the back of that is the diversification story. So sectors like communications and IT, like consumer products, like financial services, are the real growth sectors and will continue to be the real growth sectors in Africa, together with infrastructure. You'll find in our report, and I'll refer to it a little bit later, we've done some fairly detailed analysis building on some of our narrative last year regarding infrastructure as to the exact state of infrastructure and where or what kind of investment is happening in Africa around infrastructure. So moving on now from the numbers to the perceptions. There's a whole chapter devoted to this in the report itself, but I guess what we're really highlighting today, and what we highlight in the report, is the stubborn perception gap that really for us is highlighted once we separate out the respondents to our survey who are established in Africa, who are doing business in Africa, and those who are not yet established in Africa. As with last year, it just comes through very strongly again this year that those who are doing business in Africa already, who have been doing business in Africa for many of those companies for decades, really understand the risks in terms of operating on the continent, understand the opportunities, understand where the continent has been and where it is and where it's going, are overwhelmingly positive about doing business in Africa, about Africa as an investment destination. Those who haven't yet made an investment in Africa, who are not yet established in Africa, still seem to be stuck in a time and place that we would say seems to us at least 10 years, if not more, out of date. Skepticism among those potential investors, I guess, still seems to run very deep. And just to illustrate the points, we ask a few questions. We ask a question such as, has Africa's attractiveness as a place to do business improved over the past year? People who've already got an investment in Africa or a presence in Africa, 70% of them say yes, it has improved. For those who've not yet invested in the continent, only 31% of those say yes, it has improved. So a big gap there. Similarly, looking forward over the next 3 years, will Africa improve as a place? Will its attractiveness improve? Will it become a more attractive place to do business? 86% of those doing business in Africa say yes, it will improve. Only 47% of those not doing business in Africa say yes. So you can see the gap there. When we then look to cross-compare Africa or Africa's relative attractiveness to other regions, which again, for us, FDI is a competition. It's a competition not between African countries themselves, but first and foremost between regions. For those who have an established presence in Africa, there's no other region in the world more attractive than Africa other than Asia. So those with an established presence in Africa say to us that Africa is the most attractive destination, investment destination in the world after Asia. And only marginally, Asia is only marginally ahead of Africa. For those with no presence in Africa yet, Africa is stone last. I mean, not by a little way either. So you can see how strongly that gap just manifests again this year. And we feel that is a critical gap, and it's a gap that certainly for those of us who are Africans, who have a passion for Africa, who are investing in Africa, whatever your perspective is, it's a gap that we need to continue to address. We certainly feel, and now moving on to the next section here, that once again we highlight Africa's growth story. We outline why we believe that Africa's growth and its rise is very real. We feel that the facts are overwhelming in terms of supporting our positive outlook. And moving on to page 18 here, just to reinforce some of this, and I'm going to move through this quite quickly. We've shared many of these statistics with you before, and you'll see in the report this year we've devoted an entire chapter to the key factors that for us support our relative, or why we are so positive about where Africa's come from, and why we are relatively positive about why we believe that momentum can be sustained. But it starts with the economic growth story, and not a 1 or 2 year story. Page 18, you'll see that certainly since 2002, the size of the African economy as a whole has more than tripled. When one strips out the sub-Saharan African economy since 2002 and we look at it, the size of that economy has almost quadrupled in that period. So in 10 years, the size of the sub-Saharan African economy has almost quadrupled. That's not a 1 or 2 year thing, and it's not a fluke. That's sustained, robust momentum over a sustained period of time, half of which has been in the context of let's just face it, a very soft global economy. So that for us as a starting point is a key factor. That's looking backwards. Looking forward, and we can look at a number of different forecasts here, and I'm now on page 19. But just to highlight the heat map there, as we call it, you can see what we've got there is a 5-year forward-looking GDP forecast. All it does is show us from green, on a spectrum of green on the one side, to red on the other side, green being the highest growing economies over the next 5 years, red being the slowest growing economies over the next 5 years, and the other colors of the spectrum from sort of yellow through orange, somewhere in between. There are clearly two hotspots in terms of growth going forward as well, Asia and Africa. In fact, when you look at the IMF's sort of most recent forecasts, 11 of the 20 fastest growing economies over that period, over the next 5 years, will be African. And that just continues a trend that we've seen certainly since 2000. So we're looking at a period of 15 years plus in which the size of the African economy would have tripled, sub-Saharan African economy would have quadrupled and beyond over the next 5 years. 11 of the 20 fastest growing economies in the world over the next 5 years in Africa. Over half of Africa's economy is now sitting at middle income status, according to the World Bank's forecasts, and a good number of those who are not yet middle income with a good possibility of reaching that status by 2025. Turning over the page, a couple of the other factors, we're not covering all of them in this presentation, but they are in our report, that just drive our relative optimism here. Page 20. We talked about the size of the African economy more than trebling. When we look at what actually contributes to that growth, the value added that contributes to that growth, there's an underlying skepticism, or part of that underlying skepticism is so much of it has been driven by resources. But actually, when we look at the makeup of that economy over time, you'll see on page 20 now, the degree to which services in particular have increasingly formed part of that value added, that contribution, that growth. And in fact, resources, while they remain a key driver of growth, they constitute, I mean, even when we take taxes paid into account as a result of resources, they still constitute less than 30% of that growth over that period of time. So it's not that they're not important, it's not that they're not a key driver, but they're certainly not the entire story, even most of the story, and certainly not over the last 5 years. Moving over to page 21, and I'm just keeping an eye on the time here, so I'm going to try and move through the next few slides quite quickly so that we can have time for questions. As I said earlier, another key element that we looked at last year was infrastructure, and we just wanted to highlight infrastructure again this year because it is such an important catalyst, I guess, or precondition for growth, for sustained growth, particularly in terms of connecting up markets across Africa, in terms of creating capacity for industrialization and so on. Last year we emphasized the two priorities of investment in infrastructure and the regional integration agenda. And this year we felt, let's look in a little bit more detail at exactly what is happening in terms of infrastructure investment in Africa. So we looked at infrastructure projects, we analyzed infrastructure projects, and just to clarify in case there's any confusion with this is a completely separate data from our FDR data. We're looking here more specifically at a different data set, but looking at infrastructure projects. What our analysis tells us is that, in fact, there is a lot happening in the infrastructure space. There's over 800 active, significantly sized infrastructure projects around the continent, with a combined value of around about $700 billion. Now, just to put that into perspective, those are not all infrastructure projects being implemented. You can see on the bottom of the page there how those are broken down across the life cycle. So over a third of those are still in conceptual or pre-feasibility stage. Only 27% of those projects are in progress and near completion. So just to give you some kind of context in terms of what we're actually talking about here. But that's still, you understand that infrastructure is a long-term investment. It takes a long time from conceptualization through feasibility, through project financial closure, through implementation. So, these are important numbers, and I think just give some I guess factual base to some of the conversation that's happening there, that's often ill-informed around exactly what's happening in the space in Africa. So it certainly gives us a lot of heart in terms of, as we look forward, that there is a lot happening in that space, particularly given that a full 37% of those projects, of the 800 odd projects, are related to power, and 41% of them are related to transport and logistics. So the large proportion of those projects are related to what is going to drive economies forward, regional economies forward over the next 10 years. I'm going to move on now to really a couple of concluding slides. Really, I guess this year we reach a conclusion that we could spend a lot of our time and energy trying to convert skeptics, and we think energy still needs to go into that. We still need to sell the African growth story, but more importantly, we need to shift the emphasis to enabling those who are already doing business on the continent, to enabling those who are investing, who are very positive about the future of the continent, who are creating jobs, who are developing supply chains, who are transferring technology and skills and so on, because that's what's really going to drive growth and development over the next decade. And the more that we can invest in the success of those companies already doing business on the continent, success will breed success and will attract more investment. So one of the questions we asked in our survey, and that's on page 23, was what are the key factors or constraints to doing business on the continent, and with a particular focus on those that are already doing business. And it was, two constraints came through very clearly this year. The first was around transport and logistics. Transport and logistics. Let me do the water trick again. Transport and logistics, so the ability to move goods and people in particular in and across the continent, cross-border, across different markets, the ability to get to market and get goods and goods from markets to other markets. And the other is around bribery and corruption. I'm not going to spend a lot of time on these. We spend some time in our report providing some perspective on those two challenges and providing, I guess, a few insights or drawing on the insights of others as to where some of the focus should be in terms of solutions. From a transport and logistics perspective, we, of course, highlight infrastructure and highlight the investment that's already going into infrastructure, but also highlight the point that, as important as infrastructure, perhaps even more important, is addressing key issues around customs and border management and the regional integration agenda, because ultimately, it's both tariff and non-tariff barriers here. We need a connected up approach here. Simply investing in infrastructure is not going to be the whole answer. And certainly when we look at some of the best case studies in different countries, it shows that the countries that have made the most progress in addressing challenges around transport and logistics have been ones that have taken a more comprehensive approach than only investing in infrastructure. The second one is looking at bribery and corruption, and we try to provide a balanced perspective on the issue of corruption in Africa. We feel that often Africa is painted with the same brush, and is seen, corruption is seen as being rife across Africa. The reality is a far more differentiated picture, and particularly when we compare many African countries, in fact, to other emerging markets, there are a number of African countries that actually benchmark quite well against other emerging markets. But we can't escape the fact that particularly people who are doing business on the continent are telling us that this is a very real constraint to doing business, and it's one that needs to be addressed. So, for us, again, we highlight some of this in our report. The issue is not, and increasingly not, one of getting the right legislation in place. Increasingly, many African countries are getting the right legislation in place. It's increasingly an issue of enforcing, of getting the right, kind of joined up approach across the different agencies, of perhaps giving, many countries are now instituting anti-corruption agencies, of expanding their powers, particularly to prosecute as well as simply identify, and providing those agencies with the right kind of resourcing and training and so on. The point we do make as well, though, is that bribery and corruption is not simply a public sector issue. Often we simply look at government, that it's also a private sector issue, and that private sector companies need to start taking more responsibility, particularly around transparency and transparency in reporting, need to take more responsibility in terms of collective action. We highlight the Extractive Industries Transparency Initiative as one of those, for example, in our report. I'm not going to go into any more detail around those two issues. We do provide some detail. We provide a few more ideas in our report. But I guess the overarching point here is that is our point of view, I guess, that we need to increasingly shift the emphasis onto very real issues like this, in addressing these issues and in making it easier for the people who are overwhelmingly positive about Africa and are investing and growing their investments in Africa, make it easier for them to continue with that process, continue to create jobs, continue to really make a difference, and drive the kind of growth and development that we need to see over the next couple of decades. In conclusion then, and I'm already 10 minutes over what I said I'd be, so I apologize for that. But in conclusion, and maybe just to reiterate, and I'm on the final slide here, the key themes that I articulated a little bit earlier. So firstly, our view that Africa's rise is real, that despite some of the skepticism out there, the factual evidence remains, and we've unpacked it in some level of detail in our report. It remains that the progress over the last decade, the facts are irrefutable, and certainly the facts looking forward, or the factors looking forward, the momentum that we've seen over the last decade gives us of optimism around the sustainability of that growth and development that we've seen over the past decade. Secondly, for us, the FDI numbers don't fully reflect that positive economic growth story. The 2012 was a mixed year. There was some bad, in the sense that FDI projects were down. Some relative good in the sense that proportionally the numbers grew as a proportion of global flows, and remained relatively robust in a context in which global flows were down quite considerably. But we still feel that Africa and specific economies within Africa should be attracting far greater levels of FDI. Part of that is this stubborn perception gap, and that perception gap that is really illustrated in our survey, which shows that gap between investors and people doing business on the continent, and how positive they are about both where the continent has come from and the future, and those who have not yet made that, let's call it, leap of faith. And finally, we've proposed as part of our narrative or our evolving viewpoint that we shift the emphasis, not entirely, and we need to get some balance here, but we certainly shift the emphasis away from simply trying to sell the story, trying to convert those skeptics, towards really putting a lot of energy into enabling those who are already doing business on the continent. So I'm going to conclude it there, and I'll welcome whatever questions you have. So I'm going to have to read, I'm reading these questions off a screen. I'm going to read them out loud, and then I'll take them one by one and try and answer them. From the news magazine in Nigeria, you say FDI in Africa has increased and GDP is also on the rise. But how do you explain that inequality is skyrocketing and squalor is expanding? So, I mean, let me take a step back from the emotion in that question. I think when we look at this, we take the emotion out of it and we look at this from a fact basis. And again, we've looked to address some of this in our report. The facts tell us that, you know, while clearly levels of poverty are still very high in Africa, that they are coming down, and they're coming down substantially. Depending on which data we look at, if we look at the World Bank's data and we look at poverty levels, and I'm talking now off the top of my head, but you'll find this in the report, in 1990, certainly in the mid-1990s, the number of people in Africa living beneath the World Bank's definition of poverty line, and I think that's $1.25 a day, was something around 65%. By 2015, that number is going to be down to 38%. In a context, of course, when the population of Africa has increased quite considerably as well. So certainly not suggesting that 38% of people, of Africans living under that poverty line, that's still a hell of a lot of people, but it's a far lesser proportion, and poverty levels in general have been coming down 1% year on year since the mid-90s. You know, similarly, we've seen concomitant increases in the United Nations Human Development Index over that period as well. Again, you can see the trend in our report. This is not to say that things, or certainly human development, is being addressed at rates that we'd like to see it being addressed. But I do think that the facts, as opposed to the emotion, tell a different story. That poverty levels and levels of inequality, education levels, health levels are improving in Africa. Are they improving at a fast enough pace? Certainly not. Let me leave that one there for now and take another question. And this is from the East African in Kenya. In your opinion, what are the key sectors that private equity and venture capital funds should seek to invest in particularly in the East African region? So that's a good question, and I mean, let me say up front that I'm certainly not an expert in private equity nor venture capital, and I think private equity in particular has got an interesting role to play over the next decade or so in Africa, particularly in terms, you know, given that our capital markets are relatively shallow. I think that if we look at the example of India, where private equity has played a very important role in bridging that gap, particularly in the SME sector, in terms of providing growth capital to SMEs, so medium-sized companies. I think private equity is going to play a critical role over the next decade in that regard. And I guess many of them would be looking particularly at the service sectors, and if we're looking at East Africa in particular, I think, you know, clearly there's a very exciting consumer growth story. We tend to talk about the consumer class rather than the middle class because the definition of middle class is quite contested. But when we look at economies like Tanzania, like Kenya, like Uganda, I mean, certainly the consumer product sector, the consumer goods sector, there's been incredible growth there. Financial services and particularly on the retail side, telecommunications, of course. I mean, Kenya's, you know, in many ways a world leader in some respects in terms of innovation around communications. So I suspect that that's where we're going to see the big focus for private equity and venture capital type of investment. Of course, the other categories of investment, yeah, certainly I think that sort of from a longer term investment perspective in East Africa, we're going to see a lot of investment into infrastructure and a lot of excitement, of course, around the oil and gas sector in particular, with the new discoveries up and down the coastline, with the discoveries in the Rift Valley, with you know, the sort of fairly well established, I guess, now discovery in Uganda. So, you know, I think there's going to be excitement across the board, certainly over the next 10 years in terms of East Africa. For us, it's one of the real shining stars globally, let alone in Africa. Any other questions? This is from the Financial Mail in South Africa. Sorry, I'm just going to read it as I see it. Have seen the estimates for what needs to... Oh, sorry. Got this terrible screensaver. I keep on having to... Have seen the estimates for what needs to be spent on infrastructure development, and they are huge. Where will the money come from? The need for skills is also important. How can this be achieved? Okay, so let's look at infrastructure spending. Look, clearly, the infrastructure gap in Africa is significant. I think what we've tried to do in our study is dig down a little bit into what's actually happening on the continent, because people still tend to, a lot of people still tend to quote figures from the World Bank, African Development Bank study that was published in 2009, which was referencing data that was kind of, maybe from the year before or a couple of years before, so which is now a little bit out of date. So we first asked the question, what is happening in Africa? What has been happening in Africa as of the end of 2012? So that's the first issue we tried to address. And you'll see in the report that quite a lot is happening. There is a lot of investment happening. There are a lot of projects in the pipeline. There are a lot of projects in pre-feasibility as well as kind of financial closure stage. So there's a lot happening, particularly in the transport/logistics sectors, as well as power-related investment. So that is happening, but clearly financing of those projects remains a big challenge. I think a lot of people, or an increasing number of individual countries, are looking to the bond markets as a viable source of long-term funding, a lot of which will go into infrastructure. A couple of the resource-rich countries are looking at kind of sovereign wealth funds, raising capital via those and reinvesting it into their own country. I suspect a lot of the investment from the Angolan sovereign wealth fund, for example, will go into infrastructure, but also into sectors in other countries. And of course, a lot of people are looking at the long-term capital that sits in pension funds. And the not insignificant sums that sit in African pension funds, some of which, or a big chunk of which, are often invested off-continent. So there is capital out there. I don't have an easy answer to this, but certainly organizations like the African Development Bank in particular have been at the forefront of addressing this issue. And I think we're a lot closer to answers today than we were, say, in 2009 when the World Bank brought that initial study out. In terms of the skills gap, and I'm assuming this is a broader question, not necessarily related only to infrastructure, look, that is clearly a major challenge and will remain a major challenge going forward. I think just to take a step back from that question, when we look at the trend, the diversification trend we looked at earlier, and we look at the potential growth path for Africa over the next sort of 20 to 30 years, it's very clear that we still need to see major structural transformation across most, if not all, African economies. Where is that sort of 20 to 30 year growth going to come from, the kind of sustained growth that we've seen in some of the East Asian economies? And there are different theories on this. I mean, some people will say, we need to industrialize, and the growth and the job creation is going to come from the manufacturing sectors. Others will say, look at the Brazilian case study, for example, and how they transformed the agricultural sector, and the difference that has made from a job creation perspective. Others will say, look at India. I mean, India's manufacturing sector is less than 15%, very similar to many parts of Africa, and yet they've driven sustained growth through services over the last few years. And I'm coming to the question, which is, if services is going to drive long-term growth in certain African economies, let's say Kenya, for example, in the same way that it's driven that kind of growth in Africa, clearly skills and education is going to have to become a key focus for these African countries. I mean, that's what happened in India. It's not going to be the story across the board, but certainly for countries where services in particular are going to play a key role in terms of driving growth, in terms of driving job creation, skills will have to become a key focus. The one point I'll just make in terms of our engagement with business and companies that as we said, are already doing business, investing across the continent. It's quite interesting that skills or the skills shortage certainly doesn't come through anywhere at or near the top of the list in terms of key constraints to doing business. So, while it is an issue, and it clearly is an issue, and it certainly is an issue in terms of driving sustained growth and job creation over the next 30 years, it doesn't seem to be one of the most important factors for companies doing business across the continent. Let me leave that one there. I've got a question from the Daily Democrat in Ghana. Should attention not be directed to encouraging commercial farming to ensure Africa's rise is still related to agriculture and therefore be in touch with the reality of the masses? I think that's a very good question, and it's probably one that I'm going to sidestep. To be honest with you, we still don't have our head around agriculture. It's clearly such an important sector for Africa. It's going to be such a critical sector in terms of job creation, and that's why we think that the Brazilian case study in terms of what has been done with the agriculture sector in Brazil is such an important one. But by the same token, in terms of foreign direct investment, which is where our focus tends to be, it is also such a controversial sector because of the difficulties around land ownership and some of the quite frankly the controversy around perceived land grab and real land grabs, and it's one that we haven't got our head around yet. So I'm going to have to apologize for that and be completely upfront with you. At a high level, we'll say, of course, I mean, agriculture is and has to be a key driver from both a food security and a job creation perspective. Certainly over the next 20 to 30 years, it's going to be critical. But in terms of how we do that, that's something we need to spend a lot more time ourselves giving time and energy to. Any more questions? Perhaps any questions of clarity, if anybody. Sorry, here's one from Radio 1 in Uganda. How do the surveyed investors view political stability, especially in Eastern, Western, and North Africa, as regarding investments? Again, a good question. So, it's let me call it at a macro level. When we ask respondents, and this has been consistent over the last 3 years, and it's consistent in more anecdotal engagement that we have certainly with our client base, and particularly off-continent, political risk is seen as the #1 barrier to investment in Africa. So if we're talking particularly about those people who are kind of don't have a presence in Africa, who are still, kind of looking at Africa from afar and sort of weighing up, should I put my investment into Africa or into Asia or into Latin America, or whatever the case might be. I like the look of the growth in Africa, but, the hesitancy is generally around perceptions of political risk, perceptions of political instability. Now, for us, the facts around political instability tell a very different story, particularly when you compare the story in Africa with the story in other emerging markets. But the reality, or the fact, let's just call it, is that the perception of Africa, particularly among those less informed about developments on the ground, is still one of a continent that is generally unstable, that is generally served by dictators, etc. So, I think the reality, I guess the challenge for us is that there are still enough of those stories to continue to harden those skeptics. Our view, and certainly one that we believe again the facts support, is that increasingly the large majority of African countries are peaceful, are relatively stable, are progressively democratic, and particularly so when we benchmark them against countries in Asia and Latin America. But the perceptions, among a relatively small minority, but an influential minority in certain particularly developed markets, is still that Africa is unstable. So that certainly remains an obstacle to increasing levels of investment into Africa. a question from Nigeria. Apart from South Africa, is any other African country capable of aggressive Africa investment drive? Who are these countries and where is their sphere of influence? Okay. Another good question. So my understanding is, I did make the point that South Africa has been substantially growing its investment, or private sector companies in South Africa have been substantially growing their investment into other parts of Africa. The other two countries which really stand out over the last 5 years that have grown investment are Kenyan companies and Nigerian companies. Particularly in the financial services space, you'll see the likes of the Dangote group out of Nigeria that is growing, exponentially in some ways across other parts of Africa. So certainly Nigerian companies and Kenyan companies stand out for us. The Kenyan companies tending to invest in other parts of East Africa for now, and starting to come southwards down into parts of Southern Africa. The Nigerian companies probably a lot more, the likes of Dangote, for example. You'll find Dangote in Ethiopia, Zambia, and so on. So perhaps a lot more dispersed in that way. We anticipate over the next couple of years investment out of Angola in particular. We expect to see a strong growth in Angolan investment into the rest of the continent, particularly with that sovereign wealth fund. And I think the sovereign wealth fund in Nigeria as well, while a lot of that might be reinvested domestically into infrastructure projects, for example, we're also likely to see investment into other parts of the continent. There are, though, an increasing number of entrepreneurial success stories that we're seeing in places like Ghana, in places like Zambia, even Zimbabwe, as it emerges from several years of relative, say, economic instability. Companies that are looking for growth outside their borders. So I think we're going to see an increasingly diverse growth story from Africans themselves investing in other parts of the continent. We are almost out of time. Maybe time for one more question, Francois. We've got one last question from the East African. What kind of incentives and reforms should Africa undertake to enable it to benefit from the growing interest from private equity firms, funds, and venture capitalists? That is a good question. I think let me not answer this too specifically. I think first and foremost, what we would like to see and what we think would drive certainly far greater levels of investment from not only private equity funds, venture capitalists, but more broadly, is an acceleration of the regional integration agenda. I think the biggest challenge for investors, particularly investors that are looking to invest in the growing consumer story, is that Africa's markets remain very fragmented. There are very few markets today anyway which in and of themselves provide critical mass. And so one needs to, we need to look for a joined up approach. If we take, and let's focus on East Africa for now, if we take the East African community, and I think certainly the East African community has made tremendous progress over the last few years in terms of creating a coherent regional market there. You look, and I'm talking offhand, I might be wrong by several million, but you've probably got a population there certainly approaching around about 120 million if we take the East African community as a whole. And at current growth rates, I'd guess within 5 years, you're looking at an economy the size of Vietnam today. Now, Vietnam is one of the rising stars in kind of global terms from an emerging markets perspective. You look at a market of 120 million people, the size of Vietnam, that is a market, a sizable market, and it just gives a different kind of critical mass to the kind of investment attractiveness. So for me, it's not so much necessarily about it's not to say that incentives and reforms and that sort of thing aren't important, but I think there's a bigger picture that needs to be addressed first around regional integration, accelerating that process, creating markets that are connected, that provide potential investors with critical mass. I think we're going to leave it there now because I see that we are over time. Let me just say thank you to everybody. If you didn't have access to if the material wasn't emailed to you, certainly let us know or get in touch with us. Certainly the report itself will be available online today, should already be available online. And if anybody's got any further questions or would like to get in touch with us, I think the contact for our media liaison is available, and we'd gladly have any kind of follow-up questions or interviews or whatever you want. But thank you very much for your time today.